The Reserve Bank of India has observed that some NBFC and peer-to-peer lending platforms have adopted practices that violate its directives and has now decided to tighten the rules. Ritu standing by with more details. Ritu, take us through the new rules as well as the implications.
Well, Shireen, to begin with, P2P players, which essentially match a lender to a borrower on a platform, and they're just the platform that do that, have been in India since 2014, but the guidelines for regulating these came out in 2017. And since then, there has been no updates to the regulations, because of which, certain models have evolved in a way where the regulator was not comfortable, or, there were clarity that was required, because of which certain loopholes were being exploited, so to speak, by some of the players. And now you have the Reserve Bank of India, after talking about this in public, in various speeches, in various forums several times, coming out with tighter regulations to ensure that, P2P players are adhering to the guidelines and not, in summary, taking on any credit risk, which should essentially rest with a regulated entity like a bank or an NBFC. What RBI has essentially said, that NBFC P2Ps cannot provide or arrange any credit enhancement or any credit guarantee. That is not their function. They cannot take on any credit risk, and that is to say that any loss on interest or principal or both has to be borne by the lenders, and these platforms cannot take on any risk. Thirdly, they can't cross-sell any products which are, except for specific products that have been listed out by the Reserve Bank of India, and their aggregate exposure of a lender to all borrowers across all P2P platforms cannot exceed 50 lakh rupees. This was, again, something that RBI had said earlier, but now it is reiterated in light of, certain players flouting this rules. Apart from this, RBI has also said that there can't be any loan which will be dispersed by the platform unless it is as per a board-approved policy. And the fund transfer that happens when you match a lender to a borrower also has to go through an escrow account, and that will be maintained by a bank-promoted trustee, again, not the platform. So, delinking the two very clearly, laying the responsibility on the regulated entity, as we've seen in the past, and tightening the rules, really. And we spoke to some of the P2P players, just before this, and, broadly the sense is it will affect some part of the business, but life doesn't change, because RBI has been bilaterally communicating these changes to various P2P players wherever it has seen these issues, and they're already in the process of aligning themselves with these revised regulations.
All right, Ritu, many thanks for joining us. The big story